You can't hear me. There we go. Let's start again. Welcome, guys. Welcome. Please do let me know if you can hear me. You should be able to hear me now. But what I was saying here is in this live, we're going to talk about Tesla. Someone in the live yesterday asked my thoughts on Tesla. And as someone who has held that stock for some time, I actually bought the car before I ended up buying the stock. I love the car. I love the company. I love the vision. But there is no denying that the share price has had a bit of a tumultuous time in the last few months, really, and that is to be expected. So this video is just going to be about giving you maybe a little bit of analysis of what's going on right now, but giving you the raw thoughts of, look, as an investor, if you're holding this stock, should you be worried? There's a lot of fear mongering and all that kind of stuff going on at the moment. And I'm going to talk to you about some basic stuff that may seem boring, but in hindsight, against the backdrop of the last 2 years, needs to be implemented into your portfolio if it isn't already. So I'm just going to give it to you straight down the middle, as honest as I possibly can. Before we actually get started, just as a bit of a reminder, I am on a drive to grow the channel this year. So how you can help me is by liking, sharing, commenting, engaging with this video. If you do that, the algorithm is likely to push it out to other people who may benefit from this. And if you've not already subscribed to the channel, then perhaps consider subscribing as well. All right, okay. So look, let's just cover some news first. What's actually going on? There's quite a bit in terms of some of the articles out there right now. Let's just get rid of this very quickly. 1 second. What are we doing? Let's get rid of that. And let me just share here. So Tesla shares tumble after electric vehicle company misses delivery targets. That was the last big headline that we've seen around Tesla. And as a result of that, what we've seen this year is, when the markets opened, I believe it was on the 3rd of January or so, we saw a 12% fall in the share price on that first full trading day. Now, if you go and actually have a look at the share price of Tesla, this is where the stock split happened in August, on August 25th last year. So we had a 3-to-1 stock split at that point, and on that day the share price was about $296 a share. If you fast forward to where we are right now, or essentially from that point, we've seen a downward slope, really, to be honest, and we're now sitting at what, $111 a share. I mean, that is a big drop. I mean, that's over that's over 100, almost 200% drop, really. Well, what, 266% drop roughly in the share price. Now, if you're sitting and you're looking at this as an investor, having put your money into this, this is obviously going to be concerning 100%, because you put money into something where you feel as though, this company should be growing. But this is where we have to really think about the realities of what investing is all about. Let me just get back to full screen. We need to remind ourselves of the realities of investing. The last 2 to 3 years have been abnormal, to say the least. It is very, very rare that you get into a circumstance or a scenario where the market just continually goes up. And the truth is, over the last 2 years or so, you could have been a goldfish and made money on the market. You could have picked any stock and money would have just been raining from the sky, because everything was on its way up. Now, as investors, this is where diversification comes into its own. And this is why you have a portfolio where, you're not just investing in a company like Tesla, you are spreading your money across companies of interest within a sector to mitigate and minimize the risk that you essentially have. Now, look, they have missed their delivery targets. Personally, I feel as though it's a little bit of a knee-jerk reaction, because I think it is important for us to take stock of the overall picture. There's a lot of news around, obviously, Elon as well, possibly being distracted with Twitter. And as an investor, it does actually annoy me that he's had to sell a ton of his shares, that's impacted the share price. And Twitter seems to be his project right now. It does feel as though he has taken his eye off the ball at Tesla, and it's now firmly on Twitter. And when you think about Tesla, he is the person associated with that brand. He's the one who made it what it was. So naturally, there's going to be some investor unease around that. And I feel that unease myself, seeing what he's doing at Twitter. But with that being said, though, if you buy something for $44 billion like he did, you're going to want to put um, focus your attention on that thing, particularly when it's a loss-making business and you need to turn that around because your 44 million quid, billion quid is at stake. And when you get margin called and have to sell down quite a large holding of your Tesla shares to cover that, all of these things conspire. They don't give a lot of confidence. And I think that's one of the issues that you have with Tesla right now. But with that being said, I think it is important to take a look at what's actually going on in terms of the numbers and look at it from a very high level. So let's just get back to some of the announcements. So I can link some of this afterwards. I'll put them in the chat so you can go and read this yourself. But this is essentially a snapshot of the fourth quarter of 2022. Okay, so these are the headline numbers that I think everyone needs to kind of be aware of. So in the fourth quarter, they produced 439,000 cars and delivered just over 405,000. Now, the target for delivery was 420,000 vehicles in Q4. They missed it by about 15,000. It is that's been the catalyst to the drop in the share price. Okay. Now, in 2022, vehicle deliveries grew by 40% year on year. Think about that. So, in an environment where most car companies are struggling to grow, the deliveries grew by 40% year on year to 1.31 million, while production grew by 47% to 1.37 million. That's obviously a byproduct of new factories coming online. Now, this is where I can talk about this from the perspective of an owner, because if I'll show you the production numbers in a moment, but if you're driving around or you've had a Tesla like I have for maybe 6-7 years or so, when I first got my Model S, there were barely any Teslas on the road. You would be lucky if you saw one on the opposite side of the road on the motorway. Now they are everywhere. There are Model 3s all over the place. There are Model Ys all over the place. Now, whilst that is a good thing because it speaks to their market share, and their market share in 2022, by the way, they absolutely dominate the market. Just have a look at this. In 2022, the Tesla market share of the EV sector was 71.4%. They absolutely dominate the EV sector. The closest person to them is Hyundai, followed by Ford, followed by Volkswagen. Others combined, 9.2%. Now, you would potentially, and I thought when you look at the competitors, Volkswagen probably poses the greatest threat. But at the moment, they're not where they need to be when it comes to market share. Tesla dominates market share, 71.4% market share. And that is being translated on the roads. Now, I'm part of the Tesla's owners group. And if you go into their Facebook group, constantly in that group, you are going to hear little arguments and spats. In fact, over the Christmas period, one of the things that I did see, which I have encountered, so I've had my car for 7 years. I have never waited. I've never ever seen any of the supercharging stations with queues. This Christmas, there were queues around the corner because there are so many of these Model 3s, Model Ys now on the road, which is being translated into their delivery numbers physically on the road that I think, and we'll come to talk about some of the risks that I think they're going to take, infrastructure is going to be a big factor moving forward for Tesla and for the business. And that leads us on to conversations around, improvements in battery technology, rapid charging, whether there's any new innovations within that area specifically, because some of the new EVs that are being produced, they run the risk of losing the technological advances that they currently have if they don't implement something relatively soon that doesn't put people off buying the Model 3s and the Model Ys. Now, let's actually just have a look at the numbers in terms of the deliveries for, well, the production numbers and deliveries for the Model 3 and the Model Y, because these numbers are actually pretty good. So if you look at this, break this down into 2022, what they're saying here is the Model S and the Model X. So I've got the Model S. The Model X and the Model S are the kind of premium kind of range vehicles. They're more expensive, they're much, much bigger. They produce 71,177 Model X's and Model S's. They deliver 66,705. So this will include the Model S Plaid, the Model X Plaid, so on and so forth, with the new facelift with the yoke steering wheel. Look at the numbers for the Model 3 and the Model Y. Significantly more. 1.2, almost 1.3 million produced, just over 1.2 million delivered. That's globally. So these numbers are ramping up massively, and it is going according to the plan. The plan from Elon at the very, very beginning was to launch with the Model S, introduce the Model X to give it that variation within the range. But ultimately, the plan was to make the Model 3 and the Model Y the more affordable versions, which will become the most popular vehicles on the car. And when it comes to EV, they absolutely take that cake. Now, it is interesting when you start looking at the numbers for Tesla, okay? And this is some of the numbers that they've kicked out. Gross profits. This is really, really important, because all the way through 2022, I think I spoke about, and 2021, I spoke a lot about how Tesla is now vertically integrated. That means that now they no longer outsource the production of the Teslas, any of the models, to outside components, outside manufacturers. And what that means is you're able to scale down your production costs, you're able to keep more of your profits, and that gives you the ability that in times like this, where there might be greater competition or you're heading into a recession, you want to keep up demand and satisfy the customer demand and supply, but adjust to economic circumstances. You have the ability to do price reductions where you can. And you can do that because you take it from your profit margin. Now, with most EV companies, they don't necessarily have the profit margin to be able to give price reductions in order to keep their market advantage. Tesla do. And you can see this when you start looking at the numbers when it comes to their gross margin. I mean, just have a look at this. 27.9% gross margin. If they needed to pivot, if they got into a position where there was a lot of competition, where they felt like they were losing ground in terms of sales when it comes to the Model 3 or the Model Y, they can simply reduce the cost of the vehicle. And they have done that in certain parts of the world, like China, because they have it within their profit margin to do so. This, for me, is one of the strengths that Tesla actually has. And when we start Tesla as an investment, it's really, really important to remember that if you've put money into this company, and this goes for any company that you've invested in, if you've put money into a company, yes, you need to pay attention to the news, but you also need to be able to decipher and understand the scenario, the circumstances of what's going on, the context around the news that is out there, in order for you to be able to ascertain whether this is still a good investment for you. Now, this is not investment advice. I'm not here to tell you whether you should buy or sell Tesla. This is not what this is about. I'm going to give you my views, and hopefully you'll be able to, take that on board and help you make a decision of your own. But when I look at this, and I've got a lot of my money, stacked into Tesla, not a large proportion of my portfolio, because it's all about diversification. I have a good chunk of my money, but not all of my money within Tesla. And my fear is that there will be a lot of investors over the past 2 years who are first timers who have bought Tesla because it was popping, because it was the stock, because it was constantly growing. There were stock splits left, right, and center, and it was the one stock that kind of gave that little bit of a buzz and excitement, right? We have to think logically. If you have bought a company, you buy any company, you're thinking long term. Now, if they have 71.4% market share of the EV sector in 2022, it proves market dominance. We've just shown that they've got good gross margin, so they can move and adapt the price and the sales of the vehicles, the pricing of the vehicles, to increase sales if they wanted to, incentivize people if they wanted to. Those are all strategic advantages. Those are a positive when you're looking at investing. Now, it is important to note as well, right? This is probably the first time in the longest time ever that we've seen Tesla be undervalued. Now, if you go back to maybe 2 years ago, maybe even 3 years ago, the biggest complaint that you will get from a lot of analysts is It's overpriced. And that was the price that you were paying at the time to own this stock. And Elon, there was a famous clip of Elon where he was asked, "Why should anyone invest in Tesla?" And he said, "Well, actually, I never try to persuade anyone to invest in Tesla. In fact, I tell them not to. But people don't listen and they buy the stock anyway." Part of that is because he is who he is, and the sexiness and the appeal around the brand and the vision and the cars and the technology and what they're able to do. Maybe a new shiny toy, kind of like um, dynamic with the stock, that people have just driven the price up. But when you look at it, really and truly, this is the current price projections for this stock. So fair value at this point in time is $186 a share, but we're still currently trading at about $110, $111 a share right now. So it's undervalued 40.7% right now. This is the first time in a very, very long time we've seen this. Now, does that mean that this is an opportunity for you to dive right in right now? Well, that's down for you to decide. But I think it's really important to be able to take context of what is happening right now. And that includes understanding that we are entering into a recessionary period. You have to acknowledge the issues that are happening in China right now. China has got stupid COVID numbers at the moment. We've got the economy in China going through a little bit of turmoil. That is a big, big market. So clearly sales are going to be impacted because of economic circumstances. There are a lot of headwinds that this company is facing right now. And so if you're trying to have a look at this from a point of view, is now a good time to invest? I'm not going to tell you to invest. I'm also not going to tell you not to, but you have to do your research and make sure that you understand the risk that, we could still see the share price fall below $110. And I wouldn't be surprised if it does, because market sentiment right now and just the general state of the global economy, recessions globally, worldwide, inflation running rampant, these things all have a material impact on the decisions that we make as investors, not just from the point of view of what we think our investments are going to be worth, but from the point of view of people need money right now to survive in a pinch. And in a lot of economies, including ours, people feel as though they're in a pinch right now. And so therefore, money that's in the market may be pulled out because money is needed in the now. Now, that brings me on to some of the things that I think are going to be challenges for Tesla. And I've already alluded to one of them. With the sheer number of new cars that are out on the road right now, the biggest issue, this is the one that really grates on me, is they have not invested enough, in my opinion, in the supercharging network. Now, for many people, that is a strategic advantage. And I've said that it's a strategic advantage for years if you watch any of my old Tesla videos. But the rate at which they're selling cars right now is way beyond the capacity of the superchargers, at least in the UK. So I did a drive into Stelvio Pass. We took two Teslas, me and my mate Tack. We drove through Europe into Switzerland, Austria, Germany, Italy, all the way back. We supercharged all the way there. There are vastly more superchargers in Europe than there are in the UK. We need significant investment. It is one of those things, if you ever sit in the Tesla forum in the UK on Facebook, it is one of the biggest topics or reasons for arguments amongst the owners. The fact that now people are having to wait to charge, and that never happened even 2 years ago. It is literally only just started to happen back end of 2022, where you might rock up to a supercharging station and you have to wait 5 minutes. Over Christmas, people are waiting an hour. They need to invest further into the infrastructure. They have to, because otherwise it's going to dissuade people from purchasing the cars. Now, the flip side to that is that all the other car manufacturers have not invested in such infrastructure, and that is very, very true. But I think when you think about other brands, if I were to go from my Tesla into another EV, I would love to go to a Porsche Taycan, although the range at the minute it's not comparable for the amount of money that you're paying. It's not comparable at all. Nice looking car, beautiful, but it's not comparable. I'm very interested in the new Audi electrics sedans that will be coming out this year. I will probably go to one of those. But the sticking thing for me with Tesla is the supercharging network, because there are so many of them and the car does all the thinking for you. But they need to invest further into the infrastructure. I think the other issue that they have is they are very, very poor with communication, and the customer service is starting to suffer. And I think if they don't get a handle on that, that is likely to dissuade and impact people purchasing car. In the Tesla owners group, I see all the time where people have ordered a car, they've gone into one of their service centers, they haven't liked the customer service, they've cancelled the order, said goodbye to the deposit that they basically paid, because it's that bad. They have to improve on that. They really, really do. Broken promises. When you think about people paying, 3, 4, 5,000 pounds extra for full self-driving, but it constantly gets delayed and delayed and delayed, not being given access to features that you're promised. Elon is notorious for this kind of stuff. At this scale of sales, you cannot afford to have those kind of things. One of the things that has been a bugbear for me for 6 years, having my car almost 7 years this year, is when you take your car in for a service, it doesn't get cleaned and valeted. It drives me nuts. Even when I had my Audi or a BMW, if I took it in for a service, it will come out clean, pristine, valeted, cleaned. In Tesla, you don't get that. It drives me nuts. I don't understand why they don't do that. So little things on customer service, they have to figure that stuff out. They have to. And so those are some of the negatives that I see. I think from a share point of view, I'm not selling any of my holdings. I'm looking at it right now and I'm down. And it's not nice to look at, but again, it's only a small proportion of my overall portfolio. And again, this is where I talk about diversification. It's not about putting all of your eggs in one basket. And if you have done that, it is really important you go back and review your portfolio. You don't want to be overexposed to any one sector or any one company when you're investing. And I fear that over the last 2 years, there will be a lot of people who have invested. I've certainly dissuaded a lot of people when I've taken one-on-one coaching with people not to put all of their money into Tesla. There's one guy in particular almost put 40 grand in. In the end, I had said to him, look, it's your call. I can't advise you, but you've got a kid and you've got a family. So that 40K being all the money that you have, you need to take 10K, put that aside for an emergency fund, rainy day. If you're going to put 30K in, just understand it's volatile. And he put 30K in. 4 or 5 weeks later on, a bit of a wobble in the market. He cashed out. I think he cashed out at about a 4K loss or something like that. This happens, right? Because there's been so much hype about Tesla. I think where we are right now is probably what we'll see for Tesla moving forward. It's now undervalued for the first time in a very, very long time. Hopefully it will start to behave like a normal stock. But please take a lot of the news and a lot of the stuff that you're hearing right now around the analysis of Tesla, take it with a pinch of salt. If you're going to invest money into it, always think about the risk, how you mitigate that risk, how you diversify your investment into the company as well. You've got to try and make sure that you're taking care of the downside as much as you're looking forward towards the upside as well. This has gone a little bit longer than I thought it was going to, but I wanted to give you my thoughts and give you a bit of analysis. I hope that you actually found it useful. I'm just going to have a look through some of the comments that are here to see what we've got. I know that Andy's on here. How you doing? Naive Agua, how you doing? Chaz, how you doing? I'm waiting for Tesla to go under $90 and then DCA. Yep, that could be. Look, if you have price targets, nothing wrong with that at all. I think from a long-term point of view, if they keep their market share, the business is going to be good. They are still market leaders, and that's very, very important. Let me just pop this up right here. Listen, if you've not already smashed the like button, please help me do so. There's 64 people on at the moment. Let's get that up to maybe like 45. That will really, really, really help me with the algorithm. I appreciate it. And thank you for shouting that out as well. Really do appreciate it. Leah, how are you? Michael. Michael's saying here, the Tesla stock train was in 2021. It's overvalued now. Do you think it's overvalued now? I don't think it is. I think we've got to that point where actually this is probably about where it should have been. You may disagree, but I think the undervaluations of the share and the price targets for it right now are probably where they should have been back in 2020, well, 2020 and 2021, if I'm honest. Um, yeah, so when you think about the PE ratio, I think the PE ratio at the moment is still about what was it? I was looking at this earlier. It's still over that. It's still 31 times on the PE, where, if you look at the peers within that sector, it's 7 times, it's 31 times. So you're right, it's still over in valued in terms of the PE when you look at it there. Let's have a look. Scaling at $85 down to the major support 65 if it breaks load up. Good call. Good call. All right, okay, cool. Look, guys, I appreciate you for joining me for this one. Thank you so much. I know this has taken a little bit longer, but hopefully you found that useful. If you did find it useful, also share with anyone that you think might also want to see it as well. I do have another live at 8 p.m., so in about an hour and a half. We're going to talk about maths and financial literacy. If you follow me on Instagram, I posted a reel yesterday where Rishi Sunak was saying that they're going to make it compulsory for kids to take maths until the age of 18. And I'm going to be joined by a mathematician, Bobby Siegel. He's actually does a lot of stuff on TV. He's very, very clever, very, very clever. And we're going to toss up, how does mathematics actually interface and interact with financial literacy, and should those things be separated? Because currently, if you think about financial education in schools, it's taught as part of mathematics, and it shouldn't be. That's my belief. We should separate that out and have, talks about interest rates, mortgages, debt, credit scores, investing. All of that stuff should be a separate topic within school. So we're going to kick it at 8 o'clock. If you can join me then, that will be amazing. But I appreciate every single one of you. I will catch you later on. Have a good evening if I don't see you at 8 o'clock. Cheers.